In this likely bear market rally, I see vast possibilities. Here is how I intend to benefit the most from them by readjusting my portfolio. In a recent sentiment poll, 48% of market participants believe the worst is now over and that bullish times lie ahead of us. What they base this level of optimism on, I don't know. Businesses have gone bankrupt, people en masse have gone into unemployment, global productions have halted, and global bailout packages containing more zeros than you would otherwise only come across when counting stars in space or atoms in a body are now again being pumped into the economy like a sevenfold dose of antibiotics. Let us just hope our poor economical body has not become immune already from our extensive and irresponsible drug abuse. For obvious reasons, I have focused solely on index movements as of lately rather than on individual stocks. This is because the index still leads the way and does pull the overwhelming majority of decent liquidity stocks with it. In the previous episodes, I have talked at length about a bear market rally before crashing down again. We are now steadily approaching these index levels, particularly the 0.5 and 618 fib levels, which constitute a cluster of resistance, either of which I have a very hard time seeing us passing without any bullish news of global significance. The American Dow Jones Industrial Average has already reached the 0.5 and is on steady course for the 618, whereas the US Nasdaq has passed the 618 and is well on its way towards the 786. Do note that different indices may reverse at different Fibonacci levels as they tend to be comprised of different sectors, which in turn are differently affected by any prevalent events, such as the current coronavirus. Now, people on stocks forums and investing related social media threads are overly optimistic about the immediate future, as if we can just pick things up where we left them. This sentiment in combination with the steep upwards movements as of lately did temporarily interfere with my emotions too, to the extent where I almost let it overrule my rationale. In need for a sobering up and logical confirmation, I reached out to a few trading professional friends of mine for some second opinions and to see if I had possibly missed out on anything important due to the triggered by happy times we are currently in. To my great relief though, their respective conclusions were exactly the same as mine, but with the only exception that they expect the previous low at around 1260 to be broken quickly once we are rejected at any of the cluster resistances above. Personally, I still doubt we will sail through the 1240 area that easily, but it doesn't really matter too much as it will likely be broken through either sooner or later. Since a part of this channel is about letting you, dear viewers, follow my own personal journey too, this episode will be a brief update on how I have restructured my portfolio lately and a full disclosure of what I intend on doing from now on. We will look into some strategies and technicals to determine the proper game plan. This will of course help you as a trader or aspiring trader too, as you will get first-hand insights on my overall strategy, reasoning and active repositioning. But before we get started, some fun mandatory stuff. Do note that nothing in this episode is financial advice. I will never tell you what to do with your money and investments. I will only tell you what I intend on doing with my own portfolio. And as always, please don't forget to like and subscribe so that more people can benefit from the same information, blah blah blah. Now, I currently hold two positions. Quickbit and Star Vault. The lion's share is in Quickbit, and until recently I was all in and with no liquid assets on the side. For more on this, please watch the episode I'm all in and why this is the only right move, linked to at the end of this episode. As I had detected a sideways trading range, illustrated by the box here, once the global indices were busy waterfalling, I sold off 60% of my Quickbit position at the retest of that very range, literally at 1080, which was a technically perfect price. Beautifully ideal indeed. We have now sailed through all the moving averages and broken through back into the range. We are also trading within the red Ichimoku cloud, which on its own constitutes a resistance level. But having pushed through the other resistances is of course bullish. But as I have learned from my mistakes back in the days, I know better than to open up a bottle to celebrate just yet. Here are the things I see and the technicals upon which I will base my hold versus sell decision on. But before we get into those, let me first be utterly clear about something. My long-term belief in Quickbit still stands. Nothing has changed one bit. If anything, my beliefs are even stronger now than before, and do bear in mind that they were strong enough for me to be all in on as they were. No, I'm a trader, and my incentive and goal are to make as much money as possible by utilizing the swings of any given stock or equity. My long-term goal is to own as many Quickbit stocks as possible. Now to the technicals. 1. First of all, we already have 3 lower highs since the all-time high in August last year, which all line up for a nicely diagonal resistance line. This of course is bearish on its own. But when we zoom out a bit more, we actually technically have a confirmed descending triangle. Or rather, the entire stock price development since its IPO is one gigantic descending triangle, which in this case statistically will have its outbreak sometime in late May or early June. Of course, give or take a couple of weeks or so. For that reason, I would not be surprised if we were to retest the 675 area again, especially if and when we do get a steep rejection on an index level. 2. As I am making this video, we do have a nasty wick on the Monday candle, which on its own constitutes weakness. This of course could quickly change. Unless we can stay range bound, I will make a quick exit until further notice. To be honest, I only feel really comfortable having longs as long as we are inside this range or above it. 3. So far the Fibonacci time zones have been spookily accurate. Every time since Quickbit's launch, they have pointed out local highs or lows as technical turning points. If this were to be the case again, we could expect downwards movements, at least in the short to mid-term. But again, these are just technical forecasts which ideally will help active swing traders to save money when the technical prognosis is negative and to make more money whenever it's strong. From a long-term perspective, however, Quickbit does look stronger than ever fundamentally, with a stupidly low PE ratio, and I have no doubt that they will reach their justified price levels. My only concern is that it may take a while still due to the global situation and the fact that the index leads individual stocks. We should not be surprised if we see some shaky times ahead with downwards movements. My personal plan as for now is to sell my remaining 40%, ideally at a retest of the descending triangle resistance line. If we were to break above it and stay above the 1080 area, I will strongly reconsider re-entering that very same 40% position, for one can always buy back. But as for now, I deem it too risky, for the temporary upside in relation to the index risks is just too limited. With regards to Starvolt, I will keep it for the following reasons. 1. It constitutes a fairly small part of my portfolio. 2. It still has the very same explosive potentials as I talked about in the previous Starvolt technical analysis episode, linked to at the end of this episode. Although I will sell off a portion of my position at the horizontal 0.28 resistance, and even more if it were to coincide with the diagonal resistance, which already has 3 confirmed touches. If it were to break above that level and stay above it, 0.50 will be my next target. And with some particularly good news, I don't see why it couldn't go there in one single go. In September 2013, for example, it shot up and peaked at a staggering 525% plus in a single day, as news about the Steam launch was made public. 3. Starvolt is cyclically less sensitive. If anything, any lockdowns and quarantines may rather prove beneficial for this computer game company. Comparing Quickbit and Starvolt as companies in general, Quickbit is the much stronger and solid candidate in every single way. Starvolt, on the other hand, is a short-term potential rocket, which is pretty much the only reason why I want to keep it. From a long-term perspective, however, Starvolt has so far performed consistently very poorly, with rights issue after rights issue. For this reason, most technical bottoms are in reality new all-time lows, as there have been more stocks in supply on most occasions. Starvolt still has to prove themselves. They really do, and until they possibly have, they will remain a very risky position to hold in the long run and should, from a risk point of view, never constitute more than a few percent of your entire portfolio. In the short run, however, it's a completely different story, as it has time and again gone absolutely apeshit with 10 to 20x returns in a matter of weeks. And as discussed in the previous Starvolt technical analysis episode, we again see the same triggers being lined up for a possible blow. Now, if and when I were to sell off my remaining Quickbit position, which is very likely to happen, I will use it all to short the Swedish OMXS30 index at the levels thoroughly discussed in the 3 recent Corona market episodes. If you haven't watched them, I strongly recommend that you do, as they in a detailed fashion outline what to be expected in these chaotic market times. To sum it all up, I will most likely sell off my remaining Quickbit position but keep my Starvolt stocks solely for its explosive potentials. And once the Swedish OMXS30 index reaches the 0.5 and 618 fib levels, I will ladder in shorts with most of my liquid capital, as the market stands a very low chance of pushing through the cluster of resistances on its own. That was all for now. Thank you and goodbye.